Howdy, everybody. This is Mike Mills with Mike Mills Mortgage and Finance, and this is the Texas Real Estate and Finance Podcast. And today, I'm welcoming two people that are going to join me to get on a topic that can seem a little in depth. It can seem like a lot, but if you break it down to some bare essentials, it's really not that difficult to understand. And the reality is that you need to understand this. You need to understand the concept of blockchain and the concepts of crypto and the concepts of NFTs and all of these things, because it is impacting our life, whether you realize it or not, or whether you understand it or not. It is coming. The train is coming, and you need to be ready. So to help me kind of sift through all the pieces of this, I'm welcoming Debbie Hoffman and Eric Lapin to the podcast. Hello, guys.
Hey, Mike.
Hey, Mike.
Hey, Debbie.
How are y'all doing today?
Good. How are
Great.
you?
Y'all getting it? I don't know what the weather is like. I think are you in South Carolina, Eric? Is that right?
Charleston, yeah.
Charleston. And then Debbie, you're on the East Coast.
Cleveland. Yeah.
Cleveland, Ohio. Oh, we actually have a branch in Ohio. It's in Cincinnati, I think. I'm not sure. But well, here it's 108 degrees. So I'm inside in the air conditioner, but everybody else outside is walking around melting on the asphalt. How are you guys feeling where you're at?
Not melting today. It's actually pretty comfortable out here, which is rare. So normally we would be melting like you in Texas. But I think, Debbie, did you move there because of Johnny Manziel about 7-8 years ago, right? Is that why you went there?
I'm here because it's a lot better than being in Florida right now. So,
yeah. Man, yeah, I lived in Florida for a year, and that was not funny. The humidity there will get. I didn't have to worry about my hair. That wasn't a problem, but I know that's a concern for the ladies out there. So, all right. So I wanted to bring you guys on because this whole topic related to blockchain, you got to throw crypto in there because people at least understand to some extent what that is, even though it's a negative term sometimes to some people. But blockchain, crypto, NFTs, all the stuff related to Web3 is another term that people they have no idea what you're saying when you bring it up. But I wanted to bring you all on because y'all have been in this world for a long time, and you've been, especially relative to everybody else's knowledge base on this, you've experienced this and gone through different iterations of it and are up to date in how all this stuff works. But so I wanted to kind of nerd out a little bit with y'all because this is a topic I love and love to talk about. But also too, I wanted to help my audience, which is primarily real estate agents and mortgage professionals, investors, to help them understand what this technology is going to mean to our industry and how quickly it's coming and what you need to be ready for. So that way, when it does really trickle down to your day-to-day life, which not quite there in different aspects, but it's coming, people are at least familiar and know what to expect. So before we kind of get into the weeds a little bit though, I do want everybody to kind of understand y'all's background some. We have bios and whatnot, but I'd rather you explain it yourself. So Debbie, why don't you start first and tell us a little bit about, what you do, how you got into this space, and,
Sure.
kind of go from there.
Sure. Thanks, Mike. I appreciate it. So my background is I'm a lawyer and an executive, and I've been in the mortgage industry my entire career, starting in commercial, moving into residential, and I'm also a board member and a professor. So started down this path really of blockchain and background in real estate finance, because when I was first an attorney, I was doing deals, and we would go to the client's site, and we would find mortgages and notes and all the ancillary documents all over the place, many of which were missing. And we would spend months on site trying to find these things. And so when I learned about blockchain in around 2016, it was an aha moment. And I said, this could fix so much of what I've seen in terms of the mortgage lending industry. And we can get more into that, but that's kind of the background.
Okay. And then Eric, how about you, buddy?
Yeah, been in the industry for over 25 years with a lot of that 15 years in the banking side. So risk, worked for 3 banks prior to the crash. So anywhere from origination to servicing to capital markets, warehouse lending, as well as correspondent lending, whole loan sales, non-performing loan sales, and then fixed income. So when I was at Credit Suisse, really learned a ton about the back end of fixed income assets and really learning about that back end of the business. And then after that, really focused more on the technology side, innovation, and got into the title insurance space, working for a couple of the large underwriters on that side. And a couple roles of corporate emerging technology roles, as well as corporate development. So in those type of roles, I got to sit at a seat that would see anything from business development to strategy to consumer related to business related to marketplaces, exchanges, all of that. So it was very, very helpful. And then back in 2012 is really where I got the interest in learning about, digital currencies and really learning about crypto and this asset that, everyone was talking about Bitcoin and Ethereum, and then starting to learn about those. And, and as we've seen in the iterations of all this types of stuff, there's two different ways to look at it, right? You've got blockchain for business uses, and then you have people that just merely look at crypto from an investment standpoint
Right.
or some sort of betting, really.
Right. Yeah. Yeah. What's like
There's a lot
gambling on
of,
the stock market? Same thing.
yeah,
I mean, it's
Yeah.
not any different.
Yeah.
you know,
It's just a different marketplace. So Debbie, and I'm going to ask both of you this
Sure.
to some extent because I want to hear your answer on it. But so just to establish, not only
Yeah.
have been dealing with blockchain and this technology for a while, but specifically related to real estate and mortgages, which both of you have extensive history in. So, and that's
Yeah.
really, what I want to focus on. But before we can do that, like I was telling you before we got on, the amount of conversations I have on a daily basis with people, and I even bring up blockchain or crypto. Well, first off, when I say blockchain, very few people still blows my mind. It's 2023, and very, very few people still know what blockchain is. I get blinks back like, well, I've never heard that. Now, if I say crypto, then I get the, oh yeah, okay, so you're one of those. So there's that. So if you were talking to a layman that came in and said, okay, tell me explain as simply as you can what blockchain is specifically, so we can help understand that a little bit, and then why you think that the understanding or adoption of it has had such a struggle for just the common person to be able to wrap their head around.
Sure. So, you know what, Mike, I didn't say properly my background so I ran a company, I started my own company in Symmetry Blockchain Advisors in 2017. And I literally toured the country teaching mortgage executives what blockchain and the difference was between that and crypto. And so just you asked the question, and I just want your listeners to know if they don't know this, they're not alone. I mean, literally, I would go from, I felt like I was on like the tour. Unfortunately, it wasn't a rock band tour, but it was a crypto blockchain education tour. And so basically the bottom line is blockchain is the protocol on which Bitcoin was originally built. And there are thousands of blockchain protocols, and there's only one Bitcoin blockchain protocol, and all the other cryptocurrencies that you might hear out there, Ethereum is another one you might have heard of. They are all built on different blockchain protocols. So the most basic concept is that they're two different things. Crypto in blockchain is a protocol. Crypto is a currency built on blockchain. Okay. Yep. So let's establish that. Why hasn't it gone mainstream? Mostly, I would say because of the media and the news. It always is harping on the nefarious players in the crypto market. And so what people can't get beyond is even executives, honestly, like I've spoken to many, many, many mortgage executives, and they can't get beyond the fact that there's these nefarious players who can potentially break into a blockchain or crypto and make something bad happen. And there's so much more to it than that, but it's really the media and the name that gives blockchain kind of a bad name. It doesn't say all the amazing qualities that we can talk about that it can do for the mortgage industry.
Okay. So Eric, how would you answer that question too?
Very similar. I mean, you have what's called it's a term that's been used for years, but it's called TradFi, traditional finance, which is what we're all used to today, which is banking, mortgage lending, consumer lending, any way that we do either payments or lending, the transfer of money and underwriting risk and making those credit offers. It's called TradFi, traditional finance. And then you have what's called DeFi, decentralized finance. And there are ways that, especially in the United States, because of where our regulation is going and some of the recent determinations we've seen from the SEC, is there's a test. It's called the Howey test, HOWEY, that has four bullets to it, four prongs that you either pass or fail it. And to date, you're seeing that the United States, for example, a lot of these groups are passing that, whereas Bitcoin is failing it, which is a good thing, meaning that it's not a security. It is a distributed ledger technology, with blockchain being part of that distributed ledger technology piece. And the use for business use cases is becoming more and more apparent, that the immutability of the data, the assignability, the transferability, the accuracy of the data can also be amended by having anything that was put in the chain incorrectly and then have it put in correctly afterwards. So you have that audit trail.
Yeah.
So especially as we see in title insurance, um, you know, you just want to make sure that you see the underlying asset and the proof of that ownership. And that can be utilized in a chain, and then a token's created of that, which makes it digital and easily transferable. So,
well, I think it's one of those things where it's funny to me, or it's ironic that the thing about blockchain that adds the most benefit to these circumstances is the immutability or the security of it, right?
Yeah.
It is the fact that you can't go in and mess with it, right? It is once it's recorded, it's there. There are decentralized blockchains and there are centralized blockchains. There are blockchains that are private, that companies are creating for themselves, and which is, maybe we can get into the whole idea of the digital dollar and the national or the Fed trying to create their own blockchain, which I'm not necessarily in favor of. But then the flip side of it is there's this expectation that it isn't safe, that because the digital age that we grow up in now, where people hack your data and they get into your phone and they check run your credit, or not run your credit, but open up credit cards, get into your bank, whatever. So it's seen as so unsafe. And yet the irony again is that no, actually it is the most safe. And that's why we're trying to move in that direction. So Debbie, why do you think, is it just the media? Is that what you think it is? Or is there, is it the legacy system that's been existing that's really pushing against it right now?
So Mike, it's a great question so let's just take this from the beginning. Bitcoin was the first blockchain. It was built in 2009 by Satoshi Nakamoto. Nobody knows if that's a person, entity, thing. But anyway, right. But anyway, it's come a long way. We've had so many, like I said, there's so many different blockchain protocols. So the first one and those thereafter, there's not so many security questions anymore with Bitcoin, but there are security questions on blockchains that are built. But the more that they are built, like any technology, the better we're getting at recognizing what the potential security breaches are. And if you look at the studies, most of the security breaches on these things are from the inside. So it's like any other kind of technology. And so you touched on all the amazing characteristics of it. And one of them is immutability. And there's this a lot of people don't understand, but it's transparency, that you can actually see who went in and who touched it and who made a change on the ledger. And the original one, so people get confused because Bitcoin, you can't see exactly who went in. It's not, you can see
wallets. You can see the hashes for the wallet.
Right. But you can't see that, like, it's not so that you can see like where that exactly is, or it's not as traceable. So the ones
unless you're the federal government, and then you can search IPs and they can find it. So you can still, they can still get found. Yeah.
Yeah. Good point. But I guess the thing I'm trying to say is that what people don't recognize is the characteristics and how long we've come from the original one and what is being changed. And another one on that point, Mike, I want to make sure people understand is we'll get into it, but is energy. Like the original one, the way blockchains were built took a lot of energy. The ones that are being built today, there's a much more conscious awareness of that, and it's not the same kind of proof of basically to add blocks to the chain.
To build the blocks. It doesn't require the same output that it did. And the technology, the mining systems are getting better and more efficient. And there was an issue with the chips and all that kind of stuff that was occurring during COVID that caused all kinds of issues as well. So yeah, I mean it is becoming more and more efficient. Eric, so when we talk about real estate and mortgage specifically, what are you seeing are technologies that are currently being utilized, that are utilizing blockchain within the industry right now? And then, is it starting to trickle down yet? We'll get into some of the stuff coming later, but how much is actually being currently put into play or that's being used today?
In the mortgage industry, I'd still say it's very little.
Okay.
In the United States, a lot of it's being done in the healthcare and energy space. Educational space is using it as well. In the lending space, you are seeing some banks that are starting to adopt it, and you're also starting to see some of these consortiums come together where banks work with one another to create a stable coin. And what that means is it's basically using a means of a currency that is acceptable by all parties involved, that's backed by some sort of an asset. And that asset is a viable asset. So when something is utilizing a fiat, US dollar is a note. It's a fiat currency. And a lot of people don't realize that, but when you're backed by the fiat US dollar, even though we've recently downgraded it, there's still a lot of value to that. Some of the issues that we saw in the news in the last 6 to 12 months with some of the companies involved in crypto that went out is they were backed by, algorithms. There was nothing there to it. So there's definitely a big difference to those things. But in lending, I mean, we are seeing some of the mortgage companies, utilize the transfer of money from an escrow upfront that can be used as some sort of a cryptocurrency. They have underwriting guidelines and loan to values that can be useful for that, for assets. And then there are companies in the servicing space too that we've spoken with that are looking at, for the same reason that you just brought up earlier, and Debbie talked about, that whenever there's a data breach, that's because there's a centralized data.
Yeah, everything's coming from one server. It's not spread across multiples. Yeah.
It's not spread across one. So when you have a block on each one, this group that would hack would have to go to each one of those to get all that information. So the chances of that happening are very slim and nil compared to what we see in today's business. It's actually better. We are seeing also use cases with lenders that are also looking at utilizing digital identification. So when you have the banking side of it up front, KYC, which is know your customer, KYB, know your business, BSA, Bank Secrecy Act, a lot of that starts on the front end when consumers are involved with getting relationships with businesses, that you're starting to see this digital identity that is also anchored to a chain, which is one of the things that we're working on as well, for digital identity through a qualified borrower medallion. And we can chat about that later, but we're seeing some growth in that in the lending industry.
Debbie, what are you seeing from, because you spend a lot of time on the education side, obviously, as you're an attorney and a professor, and you're talking to people, and I notice you serve on a lot of boards, and so you're heavily involved in the Web3 community, let's call it. What are you seeing, or what kind of questions are you getting from people out there related to this, and where's the disconnect in understanding, do you think?
So
there we go.
The biggest question that I think, so generally the basic understanding, which I think has come a long way in the past few years, it used to be people just didn't understand it, but now it's definitely coming a long way. But one of the bigger misconceptions, I think, is probably now around tokenization and NFTs and where that can play into the blockchain itself. And I also think that people are focusing so much on the crypto and liquidity side, not is enough, or not, especially in our industry, on the actual protocol and what blockchain as a ledger can do to blockchain. So I always start my conversations when people are saying, well, I really don't understand that. It's always about your supply chain and the uninterested parties that can be connected through this ledger that is open to everybody in the supply chain in a certain aspect. So I think, again, it goes back, you asked me, like, what are we seeing? It's still an understanding and use case. And you give Eric or I a use case that you think that, what can we do in our particular, where we play in the mortgage lending space or in whatever, in some other space. And Eric and I could come back and be like, blockchain would be helpful here, but you might not want in certain scenarios. And in others, maybe.
Gotcha. Sorry, you're. I'm not sure if it's my internet connection or yours, but you're kind of cutting in and out a little bit. But I think I got the most of that. So Eric, when Debbie mentioned use cases, so situations in which this comes into play. Now, your company specifically, you guys are actually working on, which is, help explain it to me, because I kind of read through some of it, and this is a thought that I had in my brain that I don't know how to put together any of this technology. But when it comes to credit modeling, for example, within the mortgage space, credit is obviously a big player. We're looking at people's credit to determine their level of qualification and if they fit. And I had always thought, once I kind of got the idea of what blockchain was, is that how far away are we from me as an individual owning my own credit? Meaning, I don't need Equifax, TransUnion, or Experian for me to present to a potential lender my viability as a borrower. Because if I have all of my personal transactions on my bank account, if I have all my payment history, if I have all my assets all on my own personal blockchain that I choose to share or give a key to for a potential lender, then to me, like, that's the ultimate freedom right there, because now I don't have to worry about mistakes. I don't have to worry about, somebody trying to steal. I mean, I know there could be issues down the road, but you guys aren't doing that necessarily, but you're working in that direction. I feel like with what you're doing with, I think it's called Passport and Ricky, is that right?
Correct. So empowering the consumer with their data so they can have virtual credit is what we're doing. So if you take aside, and we were talking about this pre-call, we live in a Web 2 world, which is basically read and write in social media platforms. So you have email, you have texting, you have social media. That's how we share and distribute information. And when we're doing a lot of that, it's done through the internet, which is open source. So the ultimate goal is when you think a step beyond that into an open protocol where you have participants in payments and lending and regulation, and at the center of all that is the individual. It's you, it's me, it's Debbie, it's all of us. Where there's a term coined June of last year by Jack Dorsey, who's
Twitter
the CEO and founder. He was Twitter, now it's Block. He was also Square. But it's called Block. And what we're doing is basically working down that path of, we're not changing it. We're basically augmenting and allowing the consumer to control the use of their data, the sharing of their data, and the monetization of their data. So when a qualified borrower is providing their bank account information and transaction data, Ricky is the intelligence that sits on top of that direct source data, direct from my bank account. So we know it's accurate data, right? So the intelligence that comes on, and this has been learned through many years of working with regulators, that there's a lot of questions that come into models. There's a lot of models out there. Some work well, some don't work well. And it's hard to determine when it's a black box. So what we've chosen to do is, and this has been worked on for many, many years, over a decade, is go down that path of artificial intelligence that's not machine learning. Go down that AI path that's utilizing linguistics and mathematically determining someone's ability to pay based off cash flow, discretionary. We can see rent histories that are coming in there. You can see if it's 8 months checks and 3 Venmos and 1 PayPal. The linguistics will pick all that up, and it removes the gibberish. You see all of it.
Yeah.
So we're not saying get rid of FICO. We're saying FICO is great, that you're in debt, and how did you handle that debt?
Yeah.
What we're saying
is, saying get rid of FICO.
But we're saying what's the holistic view and true ability to pay of a consumer? Well, this is it. If you're looking at assets and you're looking at how you handle debt together, and now you tokenize that, and we call it a medallion, right? So we all have our own medallions that we will then share into a exchange where the lenders can say, I like that medallion, but I didn't know that it was Debbie Hoffman or Mike Mills or Eric Lapin or Shaquille O'Neal or Juan Lopez. You don't know. You just know, all right, I see the soft score. I see the Ricky. They've got a positive cash flow, so it's 120 Ricky. I like this deal. I'm gonna present an offer now, and now me as the consumer can say, all right, I got a couple offers here. I like the one from Mike. I'm gonna go with Mike. Now I then send my information. The PII is now sent, and now we're doing business together, and it's for that permissible use. So everything's permissible use. It's owned and possessed and shared by me, the consumer. And this is for not just mortgage. This is going to be for any loan. So any credit, you may be approved for 500,000, but I'm going to do 40,000 for this Toyota 4Runner. I'm going to get, a business loan of 100 grand because I want to start this. It's virtual credit.
So it's almost like a debt marketplace to some extent, is what you're thinking, where I can go in and say, I'm looking for this much in a loan, or I'm able to take this much in additional debt, and then where I want to allocate that to based off of the different lenders that present offers to some extent. Is that what you're looking at?
Right. But when you deal with a consumer, they don't need to know all the underneath of all this, right? We're not going to. So we're B2B to C people, and we realized it's just get loan. That's it. All right. For what?
But Eric,
how much?
That token is is essentially a blockchain token. I mean, I just want our listeners to understand why it's so important that token is built on the blockchain, right?
Yeah.
So
the identity from that, and there's various vectors of data that are utilized, but that digital ID, or DID, it's called, is anchored on the chain.
Yeah.
But it can be sent in any format. Traditionally, Neo, blockchain, whatever the end is going to be used, is we can do that. And really, it's basically cryptographically issued loan officers that is going to be generated from a consumer app that the consumer says, I want a loan.
Yeah.
Well, I think the thing that the consumers struggle with, and it's again, it's there's some irony to it, is that crypto, blockchain, all of this takes the people's security of their data, which has been such a major
Yeah.
concern for people over the last several years, especially after all the WikiLeaks stuff, and everybody's like, I want my information. I don't want Facebook selling my information. I don't want Twitter selling. I want to control it myself. I want control of my own data. Right? It's been a big trigger for a lot of people these days. And I don't think people miss that, but what they miss is that this technology can be exactly that, where you control your data, you control who has access to it, you control who sees it. And it makes the privacy sector or the privacy aspect of what every person wants to live their life under much more attainable, because now you control your data. Because look, the internet's awesome. Like you can't say that because we're not better off than we were 20 years ago. Now we have new problems, we have new issues. The access to information at the tip of your fingers is fantastic, but now you got to sift through information to figure out what's true and what's bullshit. You got to go through both, and that can be a struggle. But your own personal information, I think, is something that, again, there's an irony in that people don't understand blockchain, but they're so concerned about their personal data. And yet those two things solve those problems. Or that solves that problem. So Debbie, from your point of view, you'd mentioned NFTs before we came on, and kind of chatted about that. Why do you think, specifically, you said a lot of people that you're dealing with always relate NFTs to art, which obviously that's a use case of it, but there's so much more to it. So explain a little bit of that, and what an NFT is, and tell people about what other things can be used for, so they have a better understanding of that.
So let's just, it's basically a mint of particular information at a particular period of time. And people think about that more about a mint of a painting or something that happens in sports, and something very specific at one period of time. But if you look at it from a lending perspective, think about it from a loan and all the information that's going in one particular loan at one particular time. And if you put that in an NFT, that can be exchanged. So it's just a different use case, and it's a use case that has a practical application, as opposed to, a lot is just more, the art is fun and it's ownership of things, but it's ownership of something that represents something else. Whereas if you do it in lending, it's ownership, it's a token, it's an ownership of something that has meaning on the market.
Yeah. Well, and that's where the digital wallets come into play. And I think, again, once you get into the world a little bit and you start digging through it, you start learning these things. Me personally went through this experience, but the understanding of the hot and cold storage, where do I keep these NFTs? Where do I keep my tokens? Where do I keep my data? And whether it's just a housing mechanism that you have through your web server, through your phone, or if it's an actual physical, device that you can plug into your computer and upload data when you choose to or not. But again, that just adds to an extra layer of security. And in the lending world, because it's one of the questions that I get asked every single time I talk to a borrower when we do pre-qualifications, when I ask them to send me their data, especially if they're, it's a little bit better for the wrong reasons for the younger generation, because the younger generation is like, sure, here you go. Because in their mind, everybody already has my stuff anyway. So who cares? It doesn't matter. But if I'm talking to someone over the age of, say, like 50, then it becomes, well, is your network secure? Can I print these off and mail them to you? I'm like, you're going to stick them in the mail? My email's secure, I promise. So it's one of those things where it's a big concern for consumers, because they're so worried about people stealing their information, stealing their data. But yet the tool that's available, that the technology is fully vetted and works right now, that solves all those problems, the adoption of it is so incredibly low, especially in our world. Yeah. Eric, do you think that has more to do with regulation? Do you think it has more to do with ignorance? Do you think, why is it that we can't get this thing across the finish line?
I think it's a lot of it, but at the top of it, I'm going to go with what Debbie said. The media puts so much in our head, and they scare a lot of people with Sam Bankman-Fried is what I hear about from people still. Bernie Madoff was doing this stuff prior to blockchain. Right. He was fraudulent with fiat currency and paper stuff, right? And typing out statements from his, IBM from 1986 or whatever it was. But but 89% of consumers agree that they want to own their financial data, and they should be able to have control of that and who has access to it. Yeah. So when you're talking about data, from the receiving end of the creditor, the lender, or the payment provider, as long as that data is direct from the source, and in our case, it's direct from the bank accounts that, or the consumer logs in and grants that access,
Yep.
then that the intelligence on top of that will be made off of direct source data and not data that's incorrect, which we
Yeah.
deal with still today a lot in the mortgage industry. And the other thing is, we're in the fourth industrial revolution right now, and it's if you look up fourth industrial revolution, it's really the disruptiveness of technology. It's the use of artificial intelligence. And I do think we're going to need regulation on how that's being used.
Yep.
I believe it can be used as great tools, not as replacements. We're just going to reallocate what people do. Certain things will be able to do more. I think you're going to see a lot with consumer engagement. You're going to see a lot with security. You're going to see a lot with relationship type of roles, as opposed to the staring and comparing stuff that we've seen for a long time.
Debbie, I saw a post recently. You're part of, or at least you're going to the Mortgage Collaborative soon.
Yeah, that's
Is that
right. This weekend. Yeah.
So my CEO for our company, her name's Kate DeKay. She's part of the Mortgage Collaborative, and I think you're on the. Forgive me because I've never gone to these things, but it's like the board for emerging technologies within the industry, or what's it called specifically?
So there's an emerging tech fund.
Yes,
I'm not on it. I'm not on the fund. I'm a judge for that. So they have a pitch competition, which
Yes.
is amazing for new technology and that can be adopted by the industry. And I can tell you more.
Please.
So basically, the fund is a collaborative. The mortgage, the TMC, the Mortgage Collaborative is a collaborative of not small to mid-sized mortgage lenders who want to be able to have the benefits of basically competing against the larger the lenders.
The big
and
boys,
so this fund was formed so that they can almost sandbox innovative technology together, because they can't necessarily, Wells Fargo might have its own sandbox to be able to look at blockchain and figure out where can we use this in mortgage lending. Whereas the Mortgage Collaborative, the fund can invest in these new technologies and determine collectively whether it's something that might be able to be useful to all of them. And so what's really great about it is this pitch competition is going to showcase these various companies and what they're doing. And I think, it's great to know whether it works or not. It's also great to be able to get the juices flowing on what else can we do. And so just by having people be exposed to this is a great thing for the mortgage industry.
So when you just said what we can do, so that's kind of the next place I want to go with. We know a little bit right now that these technologies exist. They are functional. They have been demonstrated to work and have uses and have very effective uses. But the adoption is the issue that we're dealing with right now. Which like you said, you started your company, whatever it was, 7 years ago, and you're like, we're 5 years from it, and here we are still struggling to get people to take it under control or take it under adoption. But so, Eric, from what you're seeing, what do you think like the next, within the next 5 or 10 years that we're actually going to see direct impacts to real estate and mortgages specifically when it comes to blockchain? Or what type of either companies or technologies or use cases really that we can have that are directly applicable that will actually start to impact, especially on the, real estate agent, mortgage lender, level, not necessarily the secondary guy who's dealing in capital markets and working to sell his mortgages to this investor and buy them, but the individual that's, on the ground, boots on the ground, working in the industry. When are we going to start to see that kind of impact hit us?
I think we're seeing it now, and I think it's going to be quicker. So the 5 to 7 years Debbie talked about, it seems like a very long time, but I think the next 5, we're going to see more advancement, mainly because of the sharing of information, the better security, the knowledge that I think I know you mentioned earlier, Mike, that you're still getting those questions, and I do too, but it's getting to the point where people are really they're going to have to do some research on their own, ask people that are experienced in that area, say, what should I really know? How does this affect me? How does it affect the greater good? And, there's some things like conscious capital that we were chatting about that, there's 50 million people with low or no FICO in the United States. There's a third of the workforce in the United States will be Hispanic Americans by 2030. And 25% of Hispanic Americans and 30% of African Americans feel they never had a good chance to build credit. And democratization of data, especially in financial services, is empowering the consumer, but it is also going to help the loan officer. It's going to help the real estate agent. For years I've been talking about disintermediation of the real estate agent. There's a lot of value to a real estate agent, especially for first-time home buyer and for those moving out of state and for people that are just not familiar with all the legalities and process. So I think they're just going to be better informed on how to work with a customer to explain to them that, if you share your information, your approval can go quicker by about 20 to 30 days. Here's why.
Yeah.
You're going to be asked for less documents. It's going to be less painful for you to have to attach PDFs. Number three, if you live in an area that has a digital title plant or e-recording options, it's going to be a lot quicker. You can do it by a camera, and you could do it all by digital should you choose to do that. So,
and this will help with costs too, because one of the bigger issues obviously we're dealing with right now is home prices are through the roof and interest rates are much more elevated and higher than they were. So that's creating an issue with people's affordability. But if we can make the process of getting the loan smoother and more efficient, then that would reduce costs. Yes.
Agree.
So you would have at least some reduction in it. Yeah, Debbie.
Yeah, I just want to say we actually also have come a long way in all this from post-pandemic because there's more of an acceptance of the electronic delivery of things. So, pre-pandemic, how many states allowed just take notarization as an example to be electronic. So when we talk about the 7 years pre to now and how slow we've moved, a lot of it is because the regulations really a lot because of the pandemic have helped us kind of move at a little bit of a faster pace going forward. I think that's my explanation of it too.
So we have somebody here in Texas. He's gonna be on my podcast in 2 weeks. His name's Lee Bratcher. He's with the Texas Blockchain Council, which is they're a big advocate in Texas, which I love for with the state government on coming through and figuring out regulations that they can put in play to start making Texas one of the leaders in moving in that direction. Like that's what we're trying to get to. And I love it. And, I've been to a couple of their meetings and, I'm thrilled that we have somebody in our state that's advocating for this, but, and either one of you can answer this one, but, how much do you think I call them the legacy financing system, or what was the word you used earlier, Eric?
TradFi.
TradFi, traditional financing. How much of the old school boys club, whatever that's been existing in this world for a long time is literally fighting against this whole application or this whole adoption of it? Because again, if we're talking about giving people the freedom to own their information, we're talking about keeping finance decentralized, so that way there's not one entity that's controlling access to this or making the marketplace. I mean, it's the most capitalistic thing that could possibly exist, where you're opening up the market to anybody that can participate, and yet all the legacy companies that have been around for a long time, the big banks, the Black Rocks of the world, although, I know they're filing ETFs and all that, but that's just a way to control it. But at least in my opinion, what is it? Am I being conspiratorial here, or is there a concerted effort to keep this out? And either one of you can take that.
I'll take first. I think that this is where we're talking about. This is where you're seeing the open network, open source approach to looking at decentralized finance, but with a centralized finance regulatory control on it. You can have CeFi meets DeFi.
Okay.
Centralized meets decentralized.
Yeah.
So the technology piece can be decentralized, possession and control of the consumer based off of source data, not just the data that we're doing here, but any data that is going to be utilized and permissioned by the borrower can be used in any decisioning. And this is for the lending piece. When you get into the payments piece, you're already seeing, you brought up FedNow a little bit earlier. We're really seeing that a lot of money movement is going to be, it's here to stay. And that's the thing. As far as those that are afraid of it, I think there's a couple reasons for that. I don't think it's conspiracy with what you're saying at all. I think it's just more of, it creates competitive markets, data sovereignty, the network effects are there. You already have personal data, entity data, institutions, regulatory, all working with one another. If you have a shared framework of how to do this and the regulatory bodies are involved, I think it works very well. It's just you now have pathways that are digitally storing that data, and it's immutable, and it helps with audit trails, because we get in trouble when we have audit problems.
Debbie?
Yeah, just that last point brings me to that we want to make sure people understand what you were just saying. So with a blockchain, you can have all these different nodes and different, I guess, peepholes into what is on the chain. So think about a regulator who could have a node and could be able to see certain aspects. I'm not saying everything. And so when they do audits, instead of having to take all your information and again, taking it from a mortgage loan perspective and having to take a whole sampling of loans and putting them in a room and putting a regulator in the room and being able to look at certain things, the concept here is that they could have real-time direct access to specific things within your books and records on the blockchain. Am I making sense? So I just, I want to bring that point forward.
Yeah, no, you're saying that you can grant them access to specific parts of it. It doesn't have to be all of your data. It can be some of your data, and they can get into it and still do an audit, whether it's a company or an individual or whatever the case may be. You can grant access to it without having to compromise the entire data set, right?
Right. And so having a regulator be able to do that is huge because you're not, I mean, it's just, it's authenticity, it's real time. It's, so it will help with audit trails tremendously.
Well, and that's where I struggle sometimes, because knowing what I know, and it's limited, but knowing what I know about all this technology, it seems pretty evident. I mean, it wasn't even, I don't know what y'all's situation was when you first got into it, but I kind of started dipping my toe into it right before the pandemic hit. And then kind of, especially during that period of time, because we all had a bunch of time on our hands. I was going through and, going to YouTube University and all this stuff. And what hit me right away was the functionality of it. There wasn't even sometimes you read stuff, you're like, that doesn't make any sense. Let me dig a little further. I mean, it was immediate. I was like, absolutely. Okay. I get it. You have multiple servers that can all control the data. In order to go back and change it, you have to hit all those servers, which makes it nearly impossible to make it corruptible. So now you have this technology that makes something almost completely secure. And so the applications for that are mind-boggling. There's so many things that you could do with it. And yet here we are, you guys have been in it for 10 years and we're still at a point, and I know at some higher levels, they are certainly starting to implement it, but I just can't wrap my head around the fact of why we haven't further moved. I mean, there are companies like I'm talking to another guy in a couple of weeks that's doing fractionalization of property, right? So their company right now, and this is, for anybody who doesn't know how this works, you buy this is primarily being used more so in commercial properties, but you are seeing some residential. You buy a resident or a commercial apartment complex, warehouse, whatever it is. You transfer the title of that property into an LLC, and then you tokenize or fractionalize the LLC, and then sell off the token so you can buy a piece of a commercial building for $100 if you want. You earn a dividend. It might be a nickel, but you're going to earn a dividend off of that.
You're in the game. You're in the game of generating some additional income and assets.
That's right. And then when you sell it, you get the benefit from it. So So tell me about that, Eric.
Yeah. So fractionalization, I love it. I mean, what you're doing, like you said, is you're taking an asset, and it's done a lot on the commercial real estate side where an LLC is set up, and it allows tens or hundreds of individuals who have LLCs to come in and partake in that investment. And that is also another example of the tokenization of that too, where
it opens up so much liquidity now because you have so many people that are capable. If I wanted to be a part of a syndicate, I've got to put up $50,000, $100,000 in order to be an investor in that. But if I want to buy a token on a fractionalized property, I could do it for $50. I could do it for 100. I could do it for 1,000. So now, just like what Robinhood kind of did for stocks, where they fractionalized stocks, where you could purchase it with pennies, that's what these companies are doing for real estate, which I think is fantastic.
Correct.
But again, they're struggling with the same thing you guys are, is the education of the investor as to, okay, how does this work and why is it secure and all that. So, we are seeing it creep into certain spots of our industry that are starting to kind of slowly move in those adoption range, but then you run into the issues with regulators and what they're allowing and what they're not. And that's where I struggle with understanding why, if this technology is so useful and it works. It's not like we're testing it still, right? I mean, it works. So why is the adoption so slow from the big boys?
You want to know why I think it is? Oh, go ahead, Dobby.
I just want to real quick. I want to add on fractionalization. It also allows for a lot of foreign investment, and I would say it's almost like akin to crowdfunding property, the way you would crowdfund an investment. But maybe the downside, and Eric I want to hear your opinion on why, but maybe you can't move into your commercial space when you buy into a real estate through fractionalization. You're just owning a piece of something. So
yeah, but I can't go talk on I can't have an opinion on the Apple board of directors because I own 500 stocks in Apple. So I mean, it's the same thing. It's not any different.
Yeah, you're right. Okay. So
yeah, it's not solving home ownership. That's still an issue here for years. Yes. But it does help with assets that can be accumulated by those that couldn't afford the whole thing at once.
Right.
One of the reasons why I think it's slow, or there's a couple, is whenever there's competitive markets that are created, there's always a group that doesn't want competitive markets.
That's right.
Mm-hmm.
And when the competitive market is coming into play with this, we also have to think about it from the government. And whether you like government or not, whatever your belief is, there has to be some sort of regulatory body to make sure that we stay in a lane of some sort.
Yeah, there's got to be rules to the game.
There's got to be rules. Yep. We've proven as humans we can't. If we don't have yellow dotted 100%. Lines, people will be all over the road. We can't do it.
Absolutely.
So I really think it comes down to I think there's going to be another regulatory body created with people from other regulatory bodies that are going to then manage this digital currency space, really understanding what is the value of a stable coin and really understanding which blockchains are being conducted and producing a product that's being done legally. And then lastly, the government's got to be able to find it and tax it.
Right.
And when they could do all that, then they'll come out with it. And I think they're getting there now to the point where I think a lot of them understand, and I learned this at a recent event I was at last week, that you've got a lot of very, very smart people that were traditional finance that are also in decentralized finance, and some big name global companies were there. And they were saying, we're getting to that point where I think we're going to have something drawn out here probably by 2024. But I think it's going to be for the betterment of all, because it's going to really help society and help the underbanked and the underserved, and allow those that were usually invisible to now become invisible in these markets that were never seen before. So I think if it's done the right way, you can have data sovereignty and the control and use of that data back in the hands of us.
Well, and I'm glad you said it. If it's done the right way, because I'm with you, man. Regulation it makes it to where the mass adoption of it makes it much easier, right? That's one of before we came on, you brought up Ripple, which is, they've been in
how long is it? Plant-based milk.
What's that?
I was talking about the plant-based milk.
Yeah, but the company Ripple, but I mean, they've been in, is it 3 years now with the SEC that they've been in this litigation with them on and I don't even know the exact, at this point, what exactly they're dealing with about the security versus, what they're defining themselves as. But I'm all for regulation, but what you said, when it's done the right way, and the problem sometimes that we run into with regulation, and which I think, easy transition. This is what's happening, I think, with AI right now to some extent, is there's a big push in Washington to get AI regulated, because they say they don't want some, crazy person, building some sentient AI in their garage and then figuring out how to make a weapon or whatever. Right. And I understand that argument 100%. But the problem is that the regulation also then centralizes who has control over those technologies. Because with AI, for example, if the federal government says that I have to have a particular license and I have to be either Google or Amazon or one of these massive companies in order to be able to develop this technology, well, that takes the little guys and kicks them all out. Yeah. So if you take that same application and you move it over to blockchain and you say, okay, well, you can develop your own blockchain, or you can develop your own data service, or you can develop your own, coin, or whatever the case may be, but you have to have this much money, or you have to apply for this application, then it starts to shrink the field. And so then it makes it really challenging for the small upstarts to come in and do this. And the great thing about Web3 as a whole is that it is what we experienced in the 90s with the internet, because it allowed companies like Facebook and Google and Amazon to come out of nowhere, essentially, in this new technology and develop these titans that are now running our world, right? Well, the same thing, I think, is very, very likely when you look at Web3 and AI, that the companies that start now and have the most impact immediately, it always centralizes. But at this point, I don't want the game getting rigged, as the world moves into this direction, to where we're limiting it to only a select few that have money to play in the game. Does that make sense?
Yeah,
totally. I mean,
Mike, I want to again take a branch off what you're talking about in terms of regulation. What we're seeing now so much is regulation by enforcement actions. So I think for a long time, the pattern that I've noticed is, so we didn't know, we kept saying we need some regulation, or we're just, the companies are going to move outside of the US. And now we're seeing, okay, the US, actually, the regulators do understand this and they have lots of expertise. And I recently heard somebody, one of the agencies, talk about how many on staff they had, and it was phenomenal how many they have educated in these specific areas. And so, but what they're doing is more than lawmaking, is enforcement action. And what enforcement action does is it makes, like, you can't prepare for that because you don't know what it is. And so, the greatest example we saw this, I guess it was this spring, early summer, was in Coinbase, and where they had said they had a request. Is this okay? And then instead of getting an answer, the SEC went after them. So we'll see. I mean, it needs to flatten out a little bit, and enforcement is not the best way of regulation.
Yeah, well, because that costs you money to play the game, and if you don't have enough money to sustain that, I mean, it's like, Chase Bank, for example. I was laughing the other day because, and we deal with the big banks all the time, and what they impact on our small business. But Chase Bank was fined. I think it was. I'm going to get the numbers wrong. I did a thing on it a little while ago, but let's just say it was $25 million because they deleted. It was something like 100,000 emails that got moved off of, and there were 7, federal investigations for different reasons that needed access to those emails. And they completely deleted them and were like, oops, this company we hired, they got rid of it. Sorry. Right. And then they paid their $25 million.
Right.
Appreciate it. So they can do that kind of thing because they're sitting on massive amounts of cash. But the little guy that's trying to start his blockchain in his garage, or his, little AI bot that he's worked on his computer, he has no shot, because if the federal government comes in and then says they can't pay that. I mean, there's no way to do, so it's this world where we are in a place where, generational wealth could certainly be created for a lot of people, in the Gen Zs and the millennials of the world that are moving, or growing up with this technology, knowing how to use it, knowing how to move forward with it. But we have to exist in a place where we can also, have regulation, because it is important, and it brings adoption to the table, but also make regulation to where it's reasonable, right? Because, I don't mean to whatever, but marijuana regulation is a good example of this, right? When you look at different states that wanted to legalize the sale of marijuana, Colorado was the initial one, and they made licenses available to pretty much anyone. You had to apply for it. You had to get certain, meet certain restrictions, but it wasn't limited. Well, then you go to a state like, I don't know, it may have been in Ohio, but where they were trying to pass the Nick Lachey, the guy that was from like 98 Degrees in the 90s or whatever. I can't remember. It was like Michigan or somewhere in the Midwest. They were trying to pass it as well, but their legalization of it in that state limited it to like 20 licenses. There was only 20 that were going to be granted, and 15 of them had already been basically spoken for. Well, the people spoke and they voted that bill down. So it, to the country, it looked like, oh, they don't want to legalize it. But to the state, they were like, no, we want to legalize it, but we want people to have access to it, and people to be able to do, and not just limit it to a few. And that's what I fear a little bit in this industry with blockchain and with AI, is that this technology that's emerging, that the people that are in those legacy systems that have the cash are going to create rules to where, unless you have the money to participate in the game, then you're not invited to the table.
Right.
You know what I mean?
And it was Ohio.
It was Ohio. Okay.
Yeah.
Good. Yeah. Sorry. My memory, slips on that stuff. So, all right. Speaking specifically, so Eric, you said you brought up a term, you kind of explained it a minute ago, but I want you to dig a little bit deeper into the whole Web 5 idea, because I know what Web 3 is. And you can even say, hey, here's what Web 2 is. Here's what Web 3 is. Cause I still, again, people don't know blockchain. They probably don't know what we're talking about when we say Web 2, 3, and 5. So give me a little bit of context to that.
Yeah. It's a term coined by Jack Dorsey last summer. I encourage everyone to Google that, Jack Dorsey Web 5. But if you realize, and Jack Dorsey's fascinating. There was a webcast or a podcast with him just recently on Spotify I just listened to. And what's great about him is, at the crux of everything he talks about, and the reason why he went from Web 2 to Web 3 and skip 4 and just call it 5.
Where's the 4?
There's no 4, because it's basically taking the Web 2, which is the information of the email and the text,
Yeah.
texting and the social media that we're used to.
Yeah.
Now you go to Web3, where you now have the the tokenization and now that augmentation of the use of that data, and then they add what the Web 2 and Web 3 together and call it Web 5. And
Yeah.
Web 5 just simply says possession and the control of the consumer or the individual. And it's really not a, that's a term that Jack Dorsey coined, but the idea is really from 2012, a book that I read years ago called The Intention Economy, and Doc Searls is the author of that. And it says putting the commoditization back to the consumer, where the corporations don't control what they do or how they do it or how they share it. So
Yeah.
it's been around a while, but now we have the intelligence to do it. We have the data, we have the technology. And by moving more towards open source type of doing business, which is really what the internet is, that helped the entire world become connected.
Yep.
Businesses spawned up from it, information was being shared. So, think about privacy, security, fair value exchange, a competitive marketplace, earning referral fees, and most importantly, financially underserved and underbanked that are becoming visible. That's what I think all of us on this call and a lot of people in our industry are trying to solve, which we can. It's here today. We can do it. I think it really just comes down to, as you said earlier, Mike, that what's holding groups back from really accepting this. Some of it has to really be from the people that don't like it, to really understand why don't they understand it, or why don't they want to understand it. Is it self-preservation on a job? Is it saying, well, I don't want to do this, it's too efficient, I won't make money anymore? That's never a way to have anything for betterment of society and the greater good. There's always ways to earn income. It's just a different way of doing it, and you make it more inclusive for everyone. So I think very quickly we're going to see some movement with the regulators. And I'd like to ask this to Debbie, but with all the work that you've been doing and working as the professor and teaching the classes that you do, have you learned from any case studies, just even in 22 and 23, where we're starting to see the use of ethical artificial intelligence and the use of data that is actual source data to determine some sort of decisioning, instead of worrying about, well, can I trust it? Well, you don't have to trust data that's direct from the source. It's the truth. So throw that away. That's what's called zero knowledge proof. That's a whole nother thing. But
Right. Eric, yeah, we need a
Everybody has their
whole
own truth, Eric. Everybody has their own
yeah,
truth, right?
we
Yeah.
need a whole other hour for that,
Right.
because yeah, there's so much to talk about there, but it's kind of a
Give me
own
one.
topic. Yeah. I
Well,
do want to, can I reiterate, Mike,
yes,
that just like so much of this also, as Eric was saying, it's information for there's ways to help the unbanked and the migrant worker and all of that through use of blockchain and use of whether it's types of cryptocurrency or tokenization. Because Eric talked about so much of it in the product that he's that his company's working on, but there's so many more use cases there, and I think that's another really intriguing topic when it comes to real estate and finance.
Yes, I think the access to this type of stuff for individuals that, especially, I think you're going to see it more and more, and I think we already are, globally, maybe before it gets to the US, because we have these, legacy systems in place already. But I use the example a lot of times, because blockchain, essentially what it can ultimately do is cut out the middleman. It can take the third party intermediary that has all the technology and services back and forth between the end user and the customer, and it kind of eliminates that piece. Because I use the example of like a villager in Afghanistan, right? That the country's ripped to shreds. There's all kinds of stuff going on, but he has a phone, right? And on his phone, he can have access to a web wallet that he can put his crypto in. And then if he wants to sell his herd of goats to the villager across the street, they don't need to have Bank of America in between them to transact. He can send directly from his wallet to his wallet. Now, they need a currency that they can both trust, right? That they both use and spend in different ways. But at the end of the day, they have something that they can both rely on, and they don't need a middle party. And I think that's part of the reason that there has been the pushback is just because there are services, like you said, Eric, that are going to be eliminated to some extent, and people are fear losing their job or losing their money or losing what they do. But just like anything else, when the electric light bulb became a thing, the guys that were lighting up all the lamp posts and the guys that were riding their horses and putting out the candles at night, they all got jobs and they figured out ways to do something different. Now, I do think we have to do a better job as a country and maybe statewide to help people when they're in a transition period, if their industry is starting to take a turn, and see, okay, how do we educate people in new types of careers and new types of skill sets? And I think that's the biggest solution to all of this is more of what you guys are already doing out there, which I think is great, which is where I found you, where you're out there talking to people, educating them on the process or educating them on the technology and what all's involved. So that way people understand it. And when they understand it, the fear of it starts to go away. And that's why I wanted to have y'all on, is because I do feel like there's so many applications and it gets hard because even like when Eric starts talking and going through what's happening, like I'm sitting here going, man, I don't understand half of that, but okay. I mean, it sounds good, so even with my tiny brain, like I'm still trying to wrap around all this stuff. But I think what y'all are doing right now, which is, putting the word out there and helping people better start at a basic level. When I do loans are not complicated. They're really pretty simple, but people don't do it every day. And so when they talk to me and they only buy 1 or 3 or 4 houses in their life, I've got to break down every single step of the process to, this is how payments work. This is how your interest rate affects your payment. This is how much money you need, all that kind of stuff. I got to make it as simple as possible because I have to relieve the fear. Once they have the knowledge and the fear's gone, then they're much more trustworthy, much easier to work through from the rest of the process. And I think more of what you guys are doing is really what we need to have. And, I appreciate y'all, we're almost at an hour here. I appreciate y'all hopping on with me and kind of walking through this. But before we go, Debbie, is there anything, you would like to kind of leave everybody with, and, anything you have upcoming or whatever, but just kind of, where are we going to go with this thing? And are we going to have this mass adoption in the next 10 years? Am I going to be out of a job? Like, how's this going to work?
I'm gonna encourage everybody to don't walk away from here and be like, I don't understand this and I'm never gonna understand it. Right. Start following things, do some reading, follow things on your social media, wherever you have your channels, connect with Eric and me, and of course Mike, no doubt, and just continue to educate yourself. And eventually it will happen because it's not going away. You can't go backwards from technology. It's only going to go forwards.
That's right. Eric?
Yep. I think that for everyone that's in real estate and lending, just know that the consumer, especially as the other generations are coming up, are demanding this. And because of that, adoption happens and scale happens. So get educated, reach out to us. There's many, many great podcasts and articles to read, from novice all the way to experienced. And, personally very passionate about change and also the betterment of everyone. And I think that there's more and more people that are getting there. And I appreciate you having us on this call today.
Yeah. No, real quick on the education thing, I'll tell you guys how I got into it is, I heard about Bitcoin from I don't remember how it came across my eye. And so I looked at it and kind of did a little bit of digging and, watched some videos or whatever. But what I did is I took my money, which was, I think at the time I did like $100, and I put $100 in. I went and opened a Coinbase account and bought $100 worth of Bitcoin. And when you put $50, 25, whatever it is, when you put a little bit of your money into it, then you start paying attention, because now when I checked my account and it was at 125, I was like, what, and then, you buy a little more, and then I bought some Ethereum, and then I started buying, internet computer and all these. So you start going through and the crypto, the good thing about crypto, whatever you want to carry a negative or positive connotation to it is that it is a very good avenue for people to get into, because if you start doing just a little bit, don't get crazy, okay? Because it's still very speculative and it's very new, and there's a lot of shysters out there. But if you just dip your toe in that water a little bit, you're going to really start to consume more and more information, because when you have an interest in something and it impacts you, you tend to learn much, much quicker. And I think that may be a good avenue for people, even though crypto is a scary thing to some folks, but it is a good place to start learning this, because that's what opened my eyes up to everything else, is just kind of getting in that lane and then seeing the whole road and being like, oh my gosh, there's so much more to this that you don't even realize. And it's going to revolutionize how we do everything. And at this point, it's just a matter of time, I guess. But all right, guys. Well, again, I appreciate it so much. Thank you. I don't do 3-person things very often because, there's, I try to get it all within an hour. Most people listen 30 minutes of it anyway, but I do appreciate y'all stopping by, and we'll definitely have to do it again. I'm trying to do more and more, blockchain, Web3, crypto type podcast, because I do think that's where it's headed. And, I think the more I understand it, the better I can position myself to still have a job in 10 years. So,
yeah, absolutely.
Well, thanks, guys. Appreciate y'all stopping by. Thanks for everybody that hung around to the end. And next week, I will have a local realtor on. We'll get more into real estate stuff, but then go right back into crypto the week after that. So everybody have a good weekend, and we'll see you then.
Sounds good.
Thanks, Mike. Bye, Debbie.
Bye.